All right, so coming up. So I've been teasing you guys, talking about that I would give you something on currencies and oil. So I'm going to give you a piece of what I'm working on. So, and it really centers around the US dollar and are we seeing the dollar demise? In the big picture, what's happening in currencies is yes, the dollar is losing its status and strength, but it takes a very, very long time for that to happen. So there's some rules you need to keep in mind about the US dollar and how it plays within markets because it's very important for currency trends, dollar versus the yen, dollar versus the euro. Currency trends are very long in nature. The dollar doesn't move dramatically in very fast fashion because it's the anchor of the global system. You don't want your anchor swinging all over the place. So currency trends tend to move very slow, very long in nature, and you can view them as generational. Like Gen X is from this year to year. Generations are usually about 15 years in blocks, right? So when you hear about the dollar demise and is the dollar going to become worthless? Yeah, we're in the process of that happening, but it's going to take probably two generations to get there. So what is two generations? Well, one generation's 15 years, you're probably 15 to 30 years away from really getting to the point that it matters. So if you're 70, you got to look at all the BS you get in your email. If you're 80, you got to look at all this stuff that comes in and talks about how you should buy gold and bullets and butterfingers and the dollar's going to go to zero. Look at all those things from that perspective. Are you going to be alive? And if you are alive, are you going to care? Are you even going to know what the dollar is or how to use it at that time? So will it even really matter? So if you get things, if you're in your 70s, you're in your 80s, and you start getting all kind of rhetoric about, why you need to invest around the demise of the dollar, keep it in perspective of does it matter? A guy for me, younger people, yeah, we may see in history a significant change as you bring in more of these digital dollars and things like that. So commodities, the other thing to think about the US dollar, commodities tend to have a negative correlation. Not always. So there's times that they derail, but for the most part, 70, 80% of the time, if the dollar is strong, that tends to be a headwind against commodity prices. So you typically don't want to own a lot of commodities, gold, silver, oil, if the dollar is strengthening and in a trend of strengthening year after year after year. If the dollar is weakening, like it has this year, then gold and silver tend to perform well. You've seen that this year, okay? So when we go into phases where the dollar could have more strength over a year or two, then you probably want to examine your portfolio and reduce your exposure to commodities. So also keep in mind that interest rates, like the 10-year treasury rate and the dollar, they tend to move in tandem, meaning that so while commodities and the dollar are non-correlated or negatively correlated, think of like a teeter-totter, interest rates and the dollar, they tend to move in tandem as one. Not always. Sometimes there's variances, but those variances are usually over short periods of time. When you examine stuff over longer periods of time, when you have rising dollar strength, you also usually see rising interest rates at the same time. So you saw the charts about interest rates, right? So you already know my opinion about what I'm seeing in interest rates and kind of expecting there. So higher rates and strong dollar, that tends to be good for sectors like utilities, staples, financials. In the retail sector, it's good for Home Depot, Amazon, companies that have more domestic exposure and less international exposure. So that's during dollar strength. Interesting how those are also the industries that do better during stagflation, okay? So there's a reason these sectors have been leading this year. So the viewpoint of a lot of Wall Street has been, when I get into the chart of the dollar, you're going to see what I'm talking about here. Now, on the flip side of that, if you have lower rates, weaker dollar, then typically commodities will do better, industrials will do better. So if you have higher rates, a stronger dollar, the weaker sectors in the market are going to be typically industrials, commodities, tech, emerging markets. All right. Makes sense? So I'll leave that there for you to taste on that, because now I'm going to switch to the chart of the dollar. And so this is what is this? This is a 10-year. This is basically a 10-year chart of the dollar. So back to my original point, dollar trends tend to be over very long periods of time. You can see here from 2015 all the way to 2022. So that whole time frame there, that whole 5 years, the dollar essentially traded in this range right here. Remember, that's also when interest rates were trading at a much lower range. Interest rates now are trading at a higher range. Where's the dollar? It's trading at a higher range. So over since 2023, you can see the dollar has just basically gone sideways with some pretty big moves from one year to the next. And it's interesting how every year's kind of started on the low, ended on the high up until this year. So this year we've seen a big sell-off in the dollar. Okay, that's pushed gold higher. The yen's gone higher. All kinds of things have gone higher. Okay. And now you're sitting at a situation where the dollar is sitting right at these levels of support. You have this trend support over years and years and years, and then you have this horizontal support over the last 3 years. So that makes the dollar a really interesting inflection point. Now, it doesn't mean that over the next week or 2 weeks the dollar starts moving higher. But you have to look at this and start to think to yourself, well, you're at a level of support. How much lower should you expect the dollar to go? So I think the dollar is in the process over the next few weeks, in the months of June and July, the dollar is in the process of bottoming. And that doesn't mean there can't be one more low before that happens. But over the next 2 or 3 months, I'm looking for signs that the dollar's bottoming, because if that's the case, then when I look at my metals charts, I want to know when to take profits, right? Because our metals, our gold, our silver, everything's been going up. I want to know when's a good time to take more profits without leaving too much money on the table. And one great way of thinking about that is, if the dollar does start to show strength, gold and silver are going to tell me as well, because those start to show weakness. So remember those rules. Currency trends are long in nature, generational. They move very slow. Commodities have a negative correlation to the dollar. So dollar strength is not great for gold and silver. So if you've recently bought gold and silver, you want to pay attention to what's going on in the dollar, because if it changes direction, you can get a surprise. Rates in the dollar tend to move in tandem. And if we're expecting, by my bias earlier, that the 10-year treasury looks like it's pushing higher, I'm going to assume that's going to start to also give some support to the dollar. So a couple of different things. Now, there's a lot of things that can happen to disrupt these things, but at the end of the day, if we stay in this environment where the dollar starts to get footing and interest rates keep to move higher, then we continue to expect that utilities, staples, financials, domestic retailers will perform better than things like industrials, tech, emerging markets. And that's contrary to some news recently, because this last 2 or 3 months, emerging markets on this weak dollar have been talked about all over CNBC, as well as investing in Europe and all this stuff. So if they're talking about it on TV, it's closer to a top, not a bottom. So keep that in mind. So what does that mean with gold and metals? We're going to